if we look at the fixed strike stuff, we've got 70 odd bips in June, pretty decent on the at the monies, getting those close to 12 vol again. July up 30 bips, and same with August. What I'd say is interesting here is, whilst we have been seeing fixed strike skew going bid recently, on a move of 75 bips down, which if you look on a 12 volt, that's about a break-even move. We're getting the downside not that well bid. The downside is bid by about 20 bips, whereas the upside is bid by 35 to 50 bips. So the fact that upside is better bid than downside on that sell-off, that is, remember we talk about the anchoring, right? The re-anchoring, and why when the market grinds higher, we often see fixed strike skew go bid. Well, we're seeing the opposite happening here, where market goes lower and fixed strike skew gets offered, right? Now it's nothing, it's not, I would say it's not that big a deal. It's not like saying this bid for calls means, oh, that the sell-off's not real and people are trying to bid for upside. That means the market's going to bounce. It is a re-anchoring lower. And the reason why it's also happening is because skew is back to the median levels, right? The fact that skew is around median levels and not super cheap means that to really get this fixed strike skew going bid on the way down, you need to see way higher than one standard deviation moves down. You need to see like double that, like 1.5% down, then maybe that fixed strike skew will still be quite firm, or it might even be flat basically on the way down, right? Because remember, this surface, if we're here, when we were higher up, the surface is very flat basically, right? But as we move down, the surface is quite steep. So if we go from sort of here down to here, just by moving to a steeper part of the surface, the skew itself is rising, right? So for the fixed strike skew to go bid even more beyond that is a big deal, right? And requires some more sinister moves, and a realized vol of 7 just isn't going to cut it basically, right? So bear that in mind, and realize that downside vol that's already on like 17, 18 vol is going to struggle to catch a big fixed strike bid unless this stuff gets really quite dynamic to the downside. Now, that could happen because the dealers could just run out of all their gamma on the way down, and that in itself would trigger a little bit of a panic. And then one other thing to bear in mind is, as we sell off, these calls that are catching a bit of a bid become very low delta calls, right? Very low premium calls, and they essentially they catch a bid because that premium holds like a minimum level, which is why we see these upsides very well bid basically, right? So just that's something to bear in mind, and kind of hopefully helps you understand that there's not always a special reason why the skew is flattening or steepening. Often it's just the re-anchoring of the surface to different spot levels that tries to kind of keep the skew in line with where it was, right? If we saw a flat moving skew on this move down, then the actual skew would be going to very, very high levels, already in median levels. Maybe it'd be going to like 60, 70 percentile. And right now the market makers aren't letting it go there basically, right? They don't think the moves are warranting skew being that well bid, because it already is quite well bid. But for it to go that well bid would be surprising, basically.